Hey traders, Nick Sheen here. Looking at Facebook going into earnings. Today is 4/24. Kind of an odd day in the market where we've had a lot of earnings reports, and a lot of them that were great got met with a lot of selling because of one thing said or another. Google, for example, was one of the ones that was wrapped up in the Facebook debacle indirectly. By debacle, I mean the privacy issues. And Google over-delivered on their promises, but people nitpicked it after initial knee-jerk higher move to sell it down into today. I think it was down 5%. I can't remember. But anyway, so I'm a fan of the company. I'm a fan of the products as it's undervalued from a PE perspective if you compare it to other growth companies. But nonetheless, the price action has been less than desirable. So here's looking into Facebook, which reports tomorrow, I believe. This week, definitely, but tomorrow after market closes. Double check that. So what do I do now? So this is a weekly chart on Facebook. So the long-term story is definitely from the lower left to the upper right, as they say. But let's zoom in on the daily to see if there's anything we can discern from the technicals. First, let me talk about the fundamentals. The fundamentals, I've said it before, it's hard to mess up over 1 billion users. They say it's almost 2 billion. I argue that. I have a couple of accounts. I use neither. So it's not a tangible number that I believe in. But they have gobs of people. Let's say over 1 billion users, and it's hard to mess that up. That's my opinion. So long term, it should be a cash cow, continue to be cash cow. They'll have to adjust one thing or another, but eventually they'll make money. So having said that, in the short term, I don't like the price action. I don't like the overhanging risk. There are a lot of blindfolds. So instead of playing lottery tickets into Facebook earnings directly into Facebook stock, I'd rather use something else like the Qs, even Apple or Facebook, because it's a completely different ball game. If I take calls or puts into the stock and then the next morning it moves against my calls or puts, the premium I buy for that one stock, in this case Facebook, will just disappear if I'm wrong. Whereas if I play it via something else that hasn't reported or already has reported, then there's no extra premium. I'm not paying extra juice for that implied volatility in the options market. So, and I'm certainly not going to risk $150 a share or $160 a share at face value with absolutely no room to spare. So options is the only way I would do it. And short-term reaction on the event itself is a complete crapshoot. It's we've seen Caterpillar. They clobbered and raised guidance. And then the CFO, I don't know why they let the CFOs talk during they should not talk during earnings releases, because they tell it like it is and they don't embellish it and they don't choose their words carefully. So it makes no sense that a company raises guidance going forward. They say, hey, we beat expectations the way you thought they were come out, and we're going to raise the guidance down the line because of really strong demand. Okay, that's what they actually said. And then he says something like, oh, this is going to be as good as it gets. So totally confusing. You just said you're raising guidance better than what we thought you were going to do for the rest of the year, but now you're telling me this is as good as it gets. This stock goes from up 5% to down 6%. Caterpillar, okay? So just an example, short-term reactions to the earnings report and or the statements said during the conference calls are complete coin flips, the outcome of them, short term. Okay, long term, different story. So why bother with the short term here except with lottery ticket? What does that mean? Small amount of money via the options that won't break my piggy bank or my heart. Kind of like when you buy a lottery ticket. You pay a couple of bucks, you don't worry about losing the $2 you invested. And if it hits, yay! So that's how I would do it. But if somebody wants to do it differently via something else, then that's also doable via the Qs, the SPY. It's going to be infectious. Whatever Facebook does, the other guys are going to do. FANG, okay? And FANG is half of the NASDAQ. So technically speaking, let's talk about this stock. We've seen levels where we said, okay, maybe if it's here, I don't go long it unless I'm anticipating a cup and handle breakout. But I'd better see the breakout before I chase it. That would be my statement up here. And boom, falls on headlines, obviously. Then loses a trend line, a previous trend line. and then just headline after headline in front of politicians. So, and then the price consolidates in here, and we drew these two potential outcomes. Luckily for the bulls, boom, resolved itself to the upside. So when this happened, we sold puts, we bought calls, and we traded it, and we're out. I am not long Facebook into the earnings. I was short puts. They were profitable. They were at 130. So I had committed to buy Facebook at 130. I am no longer there. So all I have left to Facebook is a leftover long put position that was a sacrifice put that I just didn't want to close it today at 125 for June. So if they want to kill that stock into June, I'll make money. Otherwise, that was money I had. It was part of my winning trade. I just didn't pay money to close it. And I may do that if it falls, if Facebook falls. Or maybe I may do that tomorrow during the day. I'm not sure. But the point of my statement is I'm not long Facebook going into its earnings. I don't believe I want to be risking A, the silliness of the market these days. Even on good reports, they sell down hideously. Or B, the silliness that comes from any headlines from Facebook. There's no doubt we don't know what's going to happen with their model, pricing model going forward. That is guaranteed. Something's got to change. But there's no doubt that they can do it somehow long term. Short term, I am not certain of anything. So if I'm not certain, I'm certainly not risking money on it. That's my statement on Facebook. It's not a negative statement to Facebook. It's how I manage my risk. I'm not putting my money at risk where it's basically a coin flip for the short term. What's short term in this case? Could be weeks, because not only they report and it's one earnings report, but they're going to tell us what they're going to do and how it's going to impact them going forward. 20,000 people they're hiring. First of all, that's a really bad idea. That's a really bad idea. That's censorship. I don't want 20,000 people reading into the privacy of what people are saying, so posting. So basically you have more humans touching data, which is more likelihood of nefarious actions with the data. I'd rather see machines miss a few things here and there than 20,000 humans putting their fingers on the data. Anyway, having said that, Facebook, not long. The Qs as a proxy, you know, it's how you think the markets will go from here. Again, I don't want to scare anybody, but even before my chart, which is lagging, platform is lagging, I don't like these. When test the neckline for a while, if that neckline breaks apart, lower we go. So I don't want to be long. If I'm long anything, I'd be long small caps. Why? Because they don't have any mega caps in them. And if Qs are running, small caps are running. Today, on a bad day, the markets were down 2% or more. The small caps stayed green most of the day, and they closed down 0.5%. And we're only 4% from the all-time high. So that's obviously a healthier bunch to be in. So instead of being long the Qs, why not be long IWM or the RUT? Because they're still structurally more sound than the other guys. If the other guys will fall, these will fall, but not with the same speed. We've got Amazon, Netflix, the Fang Gang, Apple. Even Apple is getting shellacked. So if these big guys fall fast, they'll drag the whole thing down with it. And if QQQ, we are just above the neckline, maybe $3, $4 above the neckline, that's pretty important to hold, and then the technician will start screaming bloody murder there down to the 40s. Yes. Anyway, IWM is a better bet. If I wanted to play a lottery ticket on Facebook, I'd probably choose long small caps. Believe it or not. All right, Nick signing out.